the management at Hitachi Energy is now with us. Mr. N. Venu, MD and CEO, India and South Asia is with us. So when we talk about the growing HVD segment, which presents a strong opportunity, what are the orders in pipeline? And considering a few players are involved in this, how are you seeing gains coming in?
Yeah. So thank you, Pankaj. Thank you having me in your show. First of all, the whole energy transition is playing a very big opportunities, throwing a very big opportunities in India. And as you know, recently the government has come out with a 500 gigawatt of renewable transmission plan. And that has a huge opportunities, including what you talked about, the HVDC projects. And that plan talks about at least four HVDC projects in the next 4 5 years, and that's an opportunity. And when you talk about this technology, just for information, Hitachi Energy has pioneered this technology way back 50 years, and today more than 50% of our installed capacity in India as well as in world is runs through our technology in that. So we are very excited about that, and in line with this growth opportunities, we have also recently inaugurated a brand greenfield factory catering to the HVDC as well as STATCOMs and power qualities in Chennai very recently.
Okay. Sir, this is Winnie joining in as well. And what I want to know is obviously that was on the HVDC segment. But what about the expected inflows in the non-HVDC segment? What are the new opportunities actually arising from the data centers, green energy, and e-mobility as well?
Yeah. Thank you, Vinny. When we talk about the HVDC when we talk about an Hitachi Energy's technology, this is whether it is a product, system, services, it's basically the bridge between the generation and the consumption. So every part of this ecosystem, whether it is integrating of the renewable or it is the transmission of it or distribution of it, or also on the consumption standpoint, whether it is in a transport or industries. So we have a large play there. Our technology goes into that. For example, on the transport standpoint, as well as in the edge of the grid, which is data center you talked about. So we have a high opportunities in the data centers and in the energy storage in the grid, on the edge of the grid, and also on the electrification of the sectors. For example, transportation is another major sector where government wants to achieve a net zero by 2030 in Indian railways. So we see a lot of opportunities coming out with and the electrification of a whole network, including the high speed trains, etc. Those are the big opportunities for us.
Right. Can you talk to us about the overall supply chain issue and how that can have an impact on the margins, or as it's starting to ease off as the world is opening?
Yeah. No, I think the whole demand energy transition is quite a big globally as well as in India, and everything has happened simultaneously. And post COVID, it is further accelerated on the sustainability standpoint, especially on the green energy. Those are the things in that. So we do use a lot of semiconductor electronics chips as part of our technology, be it products or services or software related things. And as you know that there is a sudden spurt in the demand caused by the electrical vehicle mobilities, data centers, and those have further amplified the demand of these things, and that has definitely has caused a bit of challenges on the supply chain constraints on that. And while we see that thing will remain a couple of more quarters, but it is slowly we see signs of improving it. We're still not out of woods yet, but I would definitely see that this kind of situation will continue a couple of more quarters. But what we are seeing is a bigger picture on that. If you really look at our order growth, we are really growing quite high compared to the markets, both on the utilities, industries, as well as on the new growth areas such as data centers or those kind of things as well.
Sir, if you could just give us in terms of a growth guidance, a number that you would be looking at for FY24.
Yeah, so I wish I could, but as part of our policy, we don't give that guidance. But let me give you some pointers. What we are saying is that when talking about the orders, we are basically a long cycle company in that. If you take an order HVDC, for example, if you receive the order, by the time we get into the revenue, it anywhere between more than 12 months onwards. So that's the kind of gestation period we have it in our projects and also some of our products especially. But what we are saying is that first we are looking at the orders, and after some times this will come into the revenue over a period of time in that. So what we are saying is that since we are taking a lot of actions upfront, we are investing in our people, investing in our factories. So we are also, investing in the skill sets of our people, and with all that thing, we said that if the market is growing X, so we want to grow higher than the market, and we have been continuously proving in the last several quarters that our growth of orders is higher than the market. So that's number one in that. Then we also said that exports, we want to leverage our footprint in India. We have 19 manufacturing factories in India. When we started our company, our exports are in the range of 15%, and we said we will reach 25% by FY23, and we are already there, very close to that figure in that. And the third one also we said our margins. We are building up our organization with a long-term view in mind, and we are adding more and more localization. Today, 80% of our portfolio, what we produce globally, so we are manufacturing locally in that. So all these things will help us in more competitive and also on the margin standpoint. And we said by end of financial year 25, so we will reach double-digit margin, EBITDA margins levels.
Okay, thank you so much, Mr. Venu, for joining in with us on Markets at Noon on ET Now. It was a pleasure having you on the show. That was Mr. Venu, MD and CEO at Hitachi Energy.